Hello, friends. Good evening, all of you. So I'm back, and in today's session, we will cover transfer pricing chapter. And so let us start this transfer pricing. I hope you have studied in chapter 8 about responsibility center. See, it is very good to have an organization having decentralization. A company or organization in which the organization is working as decentralization helps the company to work strategically instead of working as a centralized organization. I hope you have studied these things in chapter 8, and I hope you understand the benefit of having a decentralized organization instead of having centralized organization. So here in this picture you can see we have an image. This image shows you difference between a centralized organization and decentralized organization. We have a picture here. I hope you can see this picture. In this picture, you can see that one side we have centralized organization, and on the other side we have decentralized organization. I hope you understand difference between centralized organization and decentralized organization. Let us understand this because our entire chapter is based on this factor. Okay, so let us understand what is decentralized organization. So in business organization, if any business organization, they assign the responsibility of the business organization, the top management, like here, the top management, they assign the responsibility of the business organization to various senior, middle, or lower management level. Okay, in this way they create responsibility center, or we call them as division, and the manager of those divisions are responsible for managing that individual division. Here you can see, for example, we have an organization which is related to gaming products. So in this case, they have created division for their gaming products, like for sport, for example, for something which is related to football, for example, something which is related to chess or computer, some different games. They have created different divisions for the different games, and they have appointed the managers, those who are responsible for those divisions. Okay, they have assigned the responsibility to the manager for those divisions. Now here you can see that each division work toward achieving the individual objective of their division. While achieving the individual objective of the division, they should work together toward achieving the overall organization objective. So these managers should not just focus on achieving the individual objective of their division. This manager should not just focus on achieving the performance of their own division. This manager should not just focus on achieving the performance of his own division like this, okay, but they should also focus on achieving the performance of overall organization. This is what we call as goal congruence. Okay, so for example, we have a responsibility center as profit center, cost center. I hope you have studied all these things in chapter 8. So for example, this division manager, he should not just focus on improving the profitability of his own division, but also the profitability of the entire organization. This is called as goal congruence. Okay, and I hope you understand the benefits of having decentralized organization. There are many benefits if the organization is decentralized instead of having centralized organization. Okay, so this is what we generally discourage to have in the organization. So in case if we have decentralized organization, in such case we must have different divisions. Okay, and every division have their own managers who is responsible for the performance of those individual divisions. Okay, so here what happened, you can see here the difference between centralized and decentralized organization. We discourage this kind of organization and we encourage to have a decentralized organization. Again, one more example of centralized organization and decentralized organization. We discourage the centralized organization and we encourage to have a decentralized organization. Okay, so we discourage the centralized organization and we encourage to have a decentralized organization. Okay, we encourage to have decentralized organization. And I hope you have studied the benefit of having this decentralized organization. I hope you understand the benefit of having these decentralized organization. Now see, if we have decentralized organization, then we must have different division in the organization. For example, we have a division A, division B, division C. We have different division in our business organization. Okay, and we have different managers for each division. We have different managers for each division. These managers are responsible not just to earn profit for this division, but for the entire organization. If he is not just considering the profitability of his own division, but the entire organization, we call it goal congruence, and we will study about this later on in this same chapter. Okay, now see, if we have a decentralized organization and we have a different division, then in such case there might be some condition arises where there is transfer of some goods from one division to another, transfer of some goods or services from one division to another division, or transfer of some intangible assets like patent, brand, royalty, license fees, transfer of these intangible assets from one division to another division, or transfer of loan from one division to another division. All of these things are possible. Okay, now if we want to transfer goods, if we want to transfer some services from one division to another, or if we want to transfer some intangible assets, or if we want to transfer loan, etc., then in such case, at what price, okay, at what price we must transfer them, at what price is all about transfer pricing. Okay, if we want to transfer the loan, what will be the interest? If we want to transfer the goods, services, intangible asset from one division to another division, what will be the price at which we will transfer our goods from one division to another division? Okay, this is all about deciding the price of transferring the goods from one division to another division, deciding the price of services transfer from one division to another division, is all about studying about transfer pricing. Okay, so I hope you understand this. Okay, and this is all what we will study in this chapter, transfer pricing. We will study about all these things. I hope. Please look at this image, try to understand this image. Let me see your queries as well. Let me see the queries. You can see, please watch this image carefully. You can see here in this image, you can see here in this image that we have two division, division A and division B. Okay, we have these two division A and division B. Okay, we have these two division A and division B. Okay, now this division A will buy raw material from market. Okay, it will buy raw material from the market, and they will do some value addition on them. And it might be possible that after doing the value addition, a finished good will produce here, and they will transfer this goods to, they have option to transfer this good to division B. They have also option to transfer this goods to external market. Okay, if a division A is producing any kind of goods, okay, they have two options: either to sell this goods to the external market or to transfer this goods to division B. Similarly, division B have two options: either to buy the material from division A or buy the material which is required here for the production, the input material which is required here, buy that material either from division A or buy that material from the external market. They have these two options. Okay, then do value addition, then after value addition, sell this in external market. So now here, if we are transferring the goods, services, intangible assets, or any other thing from one division to another division, we have to decide the price at which we should transfer them. And this is all about deciding the transfer price. But while deciding the price at which division A will transfer the goods to division B, they will not just consider the price, but they will also consider what is the external market for this product, how many quantity they can sell to external market, at what price they can sell the quantity to external market. He will consider this thing. The divisional manager at A, okay, a division manager of A will consider many things while deciding the transfer pricing. He will consider what is his own capacity, how many units he can produce maximum in the organization, his own capacity of production. Then he will see the number of unit which he can sell to the external market, the selling price at which he can sell the goods in the external market. Okay, and then he will see if he has any spare capacity for the production which is required for division B. Okay, then he will find at what price he will consider this, the external market, the price of the external market, the quantity he can sell to the external market, he will consider that. And after considering that, he will decide the unit he wants to transfer to division B. Okay, this is what manager of division A will consider. Similarly, the manager of division B will consider whether it is good to buy the material from division A or it is good to buy the material from external market. He will consider this, the manager of division B. Okay, he will consider the quantity which is required here, the price at which he can buy the material from external market. Okay, he will consider all these things. Then he will decide whether it is good for him to buy the material from A. Okay, so in this way, manager of division A and the manager of division B, both of them will consider many factors. And after considering all those things, they will try to find the price at which they can transfer their goods from division A to division B. Okay, so in this way, they will try to find out, they will try to decide the price at which they can transfer the goods from one division to another division. And this is all about deciding the transfer pricing. This is all about deciding the transfer pricing. I hope you understand this. Okay? If you have any query, you can ask. I hope you understand this. Okay? So I hope you understand that this transfer pricing chapter is depend on deciding the price of the goods or services which you want to transfer from one division to another division. This is all about it. Okay? This is all about deciding the price of transferring the goods from one division to another division. Now, what is the utility of finding the transfer price? Okay. What is the utility of deciding this transfer price between two divisions? Let us understand that. Then we will do numerical related to this chapter. What is the utility of deciding the transfer price for two division? First is to evaluate the performance of each division. See, you can see here, since the organization is a decentralized organization, it's not a centralized organization. They have different division and it's a decentralized organization. Okay, they have decentralized organization. So if you are using this transfer pricing, that will help you to analyze the performance of the manager of division A and to analyze the performance of the manager at division B and to analyze the performance of overall organization. Okay, so this will help you to decide that. Okay, and accordingly, as per the performance of the manager of, as per the performance of manager of division A, as per the performance of manager of division B, you can motivate them, okay, with bonus and all, okay, bonus commission related to which will related to their performance and profitability. Okay, so performance evaluation, for the performance evaluation, this will help them. Then employee engagement and compensation, this will help in employee engagement and compensation. See, the manager are responsible for their individual performance of their divisions. Okay, if the profitability of their division will be high, they will be the employees of their division will be compensated, and they will be regarded with the bonus and all. Okay, so this will help the organization to find the employees engagement and compensation. Okay, then coordinating among units of production and sales. See, this will help you for resource allocation. If you know the transfer pricing at this place, okay, the price at which you can transfer your goods and services. See, you have an option to transfer the goods to the external market, you have option to transfer the goods to the next division, you have your own capacity. You will see the maximum unit which you can produce, the unit which you can sell outside the market, and you can use the spare capacity and what price you can keep to use that spare capacity. So in this way, you can use your resources in best possible manner. Okay, so this will help you to use your resources in best possible manner. Okay, next is deciding the taxation and profitability. See, if you know the profit of each division, you can find that the contribution of tax related to that division, that individual division. Okay, so in this way, this will help you to find out all these things. Now they are saying that while you are deciding the transfer pricing for two division, you have a division A and you have a division B. You have these two division and you're transferring the goods or services from one division to another division. When you are transferring the goods and services from one division to another division, you are trying to find out the price at which you can transfer the goods and services from one division to another division, which is a transfer price. Okay? Now this transfer price should be at fair value, and we call it as arm's length price. I hope you understand the meaning of arm's length price. I hope you have studied the meaning of this arm's length price in income tax also. See, I hope you have studied this in income tax, that the price which will be decided between the manager of these two divisions should not be affected. This price should not be influenced by the relationship between these two divisional manager. Might be they are brothers, the managers, those who are working in these two division, they might be related to each other, like husband wife spouse relationship, or they're related like brother and sister, brothers or sister like relationship. Okay, closely related to each other. So in such case, there might be situation that they can affect the price, the transfer price. So we need a fair value for the pricing of the goods and services which we are transferring from one division to another division. So it should be fair value. Okay, so we will consider the arm's length transaction. Okay, free from influence of any kind of relationship between the two managers of the divisions. Okay, so these are all things I hope you understand. what is the transfer pricing here, where this transfer pricing arises. Okay, I hope you understand all these things. And now I want all of you to read this example and we will do this question. Okay, I'm giving you 2-3 minutes to read this question. Please read it quickly and let us discuss this question. If you have any doubt, you can ask me. In between, if you have any doubt, you can ask me. Read this question. Please read it quickly. Read this question quickly. Then we will discuss this question. Okay? Division A produces goods at a cost of ₹10. We have a division A. Okay? They are producing the goods. Okay? Their cost of production is ₹10 per unit. Okay? For division A. And transfers the goods to division B. This division A, they are transferring the goods to division B, which has additional cost. They have additional cost of production of ₹5. Okay, they are using the material from division A and then they have additional cost. Okay, this is additional cost which they are incurring. Division B sell it externally, then division B will sell it to the external market at ₹16 per unit. Okay, they're selling it at ₹16 per unit. Now, company has a policy of deciding the transfer price at cost plus 20% markup. So the cost of division A is ₹10. Okay, division A is transferring the goods to division B. So the transfer price, what will be the transfer price? Cost is ₹10 and markup of 20%. That is 20% of ₹10 is ₹2. So the transfer price will be ₹12. ₹12 will be the transfer price. Okay. Now calculate the profit of each division. You have to calculate the profit of division A. Then you have to calculate the profit of division B. Okay. Then after calculating the profit of division A and division B, you have to calculate the profitability of entire organization. Okay. Entire company. Okay. Then analyze the situation. Now tell me, can you do this question at your own? See, the transfer price, the price at which division A, manager of division A is transferring the goods to division B. So the selling price per unit for division A will be ₹12 because at ₹12 he is transferring the goods to division B and the cost for them is ₹10. Okay, so in this way you can find the profitability for division A and division B. The selling price for division B is ₹16. Okay, and he will pay ₹12 for the goods he is receiving from division A. So transfer goods, price of transfer goods, the cost of transfer goods is ₹12. They are incurring additional cost of ₹5. So in this way you can find the profitability of division B. Okay, so in this way you can find the profitability of division A and division B, then find the profitability of entire organization. Do this question and let me know. Okay, do this question. See, I have this image. I have this image. You can see in this image, we have, see, I don't want to show the entire, I want you to do this question at your own. You can see here, we have a division A and we have a division B. Okay? Division A and division B, the cost of production incurred by division A is ₹10. Okay? And they are transferring this goods to division B at cost plus 20% markup. The cost is ₹10, so markup will be ₹2. So the transfer price is ₹12. Okay? So this will be their selling price. Selling price for division A is ₹12. ठीक है, cost is ₹10. So accordingly you can find the profitability for division A. ठीक है, now for division B is selling this goods at ₹16 to the market. So the selling price for division B is ₹16. What is the cost for division B? They are incurring the additional cost of ₹5 and they are receiving the raw material from division A. Okay, so this is also their cost. So the total cost is this, selling price is this. Accordingly, you can find the profit or loss of division B. Then find the profitability of entire organization. Give me the answer. Profit of A, profit of B, and profit of entire organization. Analyze the situation and give me the answer quickly. I need all of you to give me the answer quickly. Analyze the situation. Analyze the situation and give me the answer quickly. Yeah, I got answer from Ambika, Ravi Teja, Jay Shri Lakshmi from Hyderabad, and Gomati from Chennai. Yeah, very nice. So you can see here we have this image. Okay, I hope this image is clear to all of you. Now, can you analyze the situation? I want you to analyze the situation. Can you analyze the situation? Selling price for him is 12 rupees. Selling price for him is ₹16. So you can see here. Can you analyze the situation? If I'll ask you to analyze the situation for the manager of division A, whether he will be happy with this transfer pricing or not, whether the manager of division B will be happy with the transfer pricing, the price you have decided. See, the price which you have decided here for the goods or services which the division B is division A, whether the manager of division B will be happy with this transfer pricing or not. Tell me. See, division A manager is happy because he is having profitability of ₹2. But division B manager is not happy because he is incurring loss. So he will say that instead of buying the material from you, it is better to buy the material from external market. In that case, I will not incur this loss. And see, every divisional manager, they have two goals. First, increasing the profitability of their own division, then increasing the profitability of entire organization, which we call as goal congruence. So the manager of division B, he will say that, why should I incur this loss? My overall organization is having profit of ₹1. Okay, this is the profitability of entire organization, and you alone incurring profitability of ₹2. Okay, and I am incurring loss of ₹1, which is not good. Okay, so manager of division B will not be happy with this transfer pricing. He will say that instead of buying the material from you, it is better to buy the material from external market. So this will be one condition. Manager of division B will not be happy and he will say, I'll buy the material from external market. Hai na? He will say that I'll buy the material from external market. And the second situation will be that he will ask the division A, he will negotiate with division A, and he will ask the manager of this division A to reduce the price. Instead of having markup of 20%, he will ask him to reduce the price. Hai na? Or he has three options. See, this is the second option he has, to ask the manager of division A to reduce the transfer price, hai na? To reduce this price. And third option, he has to increase the selling price of the product which he is selling in the market. Okay, these three options, in order to increase the profitability of division B, in order to improve the performance of division B, manager of division B can do these three things. First, either he can increase the selling price of the finished good. That depends, okay, whether he has this condition to increase the selling price of the goods in the market or not. Okay, so this is the first condition. This is the condition he has. He can increase the selling price of the final good which he is selling in the market. Second option, he can ask the manager of division A to reduce the price. ठीक है, reduce the price. And the third option he has, third option is that he can buy the material which he is buying from division A. Instead of buying the material from division A, he can buy the material from external market. ठीक है, but remember, while taking the decision out of all these three things, again we have to consider many other things, like whether in the market there is any opportunity to increase the market price, to increase the selling price of the goods exist or not, whether he can increase the selling price or not. ठीक है, whether if A has spare capacity, then it is good to division A, it is good for division A to reduce the selling price, because it will increase the overall profitability. Means it depend on many other things also, which we will discuss later on in this chapter. Okay, so for this we will study many other things also. I hope this is clear to all of you. I hope it is clear to all of you. I hope you can analyze the situation. Okay, I hope you can analyze these situations. See, I got answers from all of you. ठीक है, profit of entire organization, profit of company. ठीक है, so you have given me the profitability of A, B, and overall organization, but you didn't analyze the situation. I hope you understand how can we do this analysis. ठीक है, we have these three conditions. In order to increase the performance of the manager of division B, we have this manager, he is not happy with the transfer pricing. Why he is not happy with the transfer pricing? Because he is having loss of ₹1. Why should he will be happy? And the division, see, we have overall profitability of ₹1 out of the entire profitability. Division B is having profitability of, division A is having profitability of ₹2, while division B is having loss of ₹1. So obviously manager of B will not be happy with this transfer pricing. Okay, so in order to improve the performance, we can do these three things. Okay, either to increase the selling price, the price at which you are selling the product to external market, increase that selling price. Second option, ask the manager of division A to reduce this price. Third option, to buy the material. Instead of buying the material from A, it is better to buy the material from external market. So these three options are available to the manager of division B. He has all these three choices. Okay, I hope you understand. Okay, if you have any doubt, you can ask me. Now let us do this question. Read this question. Read this question. Yeah. Srinivas from Andhra Pradesh, he has done analysis. Yes, you can share the profitability of the entire organization. If the entire organization is having profitability of ₹1, that profit can be distributed between the manager of two divisions. See, so we have many options, okay? But we have to consider many other things. Okay? After considering many other things, we will decide the transfer pricing. So again, deciding the transfer pricing between the goods which we are transferring between two division is not easy. Okay, and for that we will consider many other things also. Okay, now we have this question. First I want you to read this question, then we will discuss. Read it. 1 minute to read this question. Yeah, read this question, and if you have done the reading, let me know. Shall we discuss this question? Tell me quickly. Yes or no? Shall we discuss this question? Quickly tell me, shall we discuss this question? Yes or no? Yes, ma'am. Okay, let us discuss. Raman from Delhi. Yeah. Let us discuss this question. See, we have G. G is transferring division and R is receiving division. So we have two division, G division and R division. G is transferring the goods or services to R division. Okay? G is transferring and R is receiving. Okay? We have these two divisions, G division and R division. R has a demand for 20% of G's production. Remember, while solving the question, always remember the demand of R is 20%. Okay? Demand of R is 20%. Okay? So R has a demand for 20% of G's production capacity. Okay? Whatever is the capacity, out of the capacity they have, capacity, 20% of the capacity is required by R division. Okay? State with reason which division, G or R, enjoys more advantage in each of the following independent situation. Okay? They have given you some situation and you have to tell them which division A or division G or division R, which division enjoy more profit. You have to tell them. Okay? And for that, I'm taking this picture. Wait. For the first case, I have this picture. Okay? To understand the situation, we have this picture. I hope it is visible to all of you. Okay? And you have to tell them, after considering this situation, you have to tell them which division, after considering the situation, which division will incur more profit. Okay? So this is the first situation we have. This is the first situation. You can see here that in first situation, division G, capacity, they are producing 60% of the capacity. Means out of the 100 unit, they are producing 60 units. Okay? They can produce 100 unit, they have capacity to produce 100 unit, but out of those 100 unit, they are producing, actually they are doing the production of 60 units. Okay? So they are doing the production of 60% of their capacity. Now remember, in the question it is mentioned that out of the total capacity, 20% capacity of, out of the capacity, 20% of the capacity, the goods of 20% of the capacity, they are transferring to the division R, from division G to division R. Okay? So they are transferring 20% of the capacity to division R. This is clearly mentioned in the question. Okay? So it means that remaining 40% of the capacity they will sell in the market. So this is the first situation which we have. Hai na? This is the first situation. They are selling it to the external markets 40%. They are selling to the external market 40%, and they are transferring to division R 20% of their capacity. What is their production? They are producing 60% of the capacity. The production is 60% of the capacity. Okay? Now see, they have decided the transfer pricing of the goods which they are transferring from division G to division R, the transfer price is full cost. Full cost means what? They are considering the variable cost and they are considering the fixed cost, both. ठीक है? If you are considering the variable cost per unit and you are considering the fixed cost per unit, this will be your full cost. ठीक है? Now tell me the answer. Which division will incur more profit, division A or division B? Quickly, I'm watching your answer. Quickly tell me which division will incur more profit and why. Give me the reason also. Okay, give me the reason which division will incur more profit and why. Quickly tell me which division will incur more profit and why. In this case, division G will incur more profit or division R will incur more profit? Quickly tell me and give me the reason also. ठीक है, give me the reason also. Quickly tell me. I'm watching your answer. I have not yet received any answer. See, I have received answer of Ravi Teja, but I didn't understand what he has written here. Give me the answer quickly. Okay, if they will transfer, see, they have capacity, they have out of the 100% capacity, they are producing only 40%. Sorry, they are producing only 60% of their capacity. Okay, they are producing only 60% of their capacity. Give me the answer quickly. I'm waiting for your answer. Quickly. Quickly tell me which division is incurring more profit. Okay? Which is incurring more profit? No answer. Yeah, I got answer from Gomti and Ambika. Division R. R. Division R will have more profit. Okay. ठीक है जी. ठीक है. So you have answered me that division R is incurring more profit. ठीक है. This is what you have given me answer. More advantage situation is for division R. See, I received the answer from Gomati and one more student, Ambika, and they are saying that division R, they are in more advantageous situation. See, remember this. Let me discuss this. Organization have spare capacity here. They already have spare capacity. If in any organization they have spare capacity, it is good to do the production and transfer the goods at, if you are transferring the goods to the other department in order to achieve the overall organizational profitability. See, we decide two things: minimum transfer pricing and maximum transfer pricing. Okay, you can keep the minimum price here as variable cost. Okay, when you have spare capacity. ठीक है. So in this case you can see here that they have spare capacity. ठीक है, they have spare capacity. They are doing the production of 60% of their capacity and they still have 40% spare capacity. Okay, they still have scope to do the production. So in this way, you can see here, if they are transferring the goods at full cost, this division G is not just recovering the variable cost, but division G is also recovering the fixed cost. Okay, they are not just recovering the variable cost, but they are also recovering the fixed cost. While, see, if we see it as an overall organization, they have spare capacity, means machine are not fully utilized. You are not utilizing the machines or resources 100%. Okay, in such case, you are, see, if you are not using your resources, what we have studied in chapter 3, in chapter 2, try to use your resources in best possible manner, है ना. If you have spare capacity, use them. Even if you are recovering variable cost, ठीक है, use your resources in best possible manner. So you will study this later on in the chapter, that if in such case you can keep the transfer pricing as the variable cost. ठीक है, the minimum transfer pricing as variable cost. While in this case, you can see that they have kept this transfer pricing recovering both variable and fixed cost. So this is an advantageous situation for division G. ठीक है, while in such situation, division R can negotiate to receive the goods at variable cost. He can negotiate. He can say that if I will not receive the goods from you, you will have more spare capacity. Okay, you will not see, if they will not use this 20% capacity, then what happened? Out of 100% capacity, they are just doing the production of 40%. Okay, and remaining 60% is a waste. Okay, so for such situation, it is advisable to do the production and recover your variable cost. Okay, so this is an advantageous situation for division G, because you are not just recovering the variable cost, but you are also recovering the fixed cost. I hope it is clear. If it is not clear, please tell me. We will do this again. Please tell me it is clear or not. Remember, always remember, if we have spare capacity, okay? For example, I know that I can produce 100 unit from my machine. Okay, for example, I'm doing the production. I know that my machine can do in 1 hour, my machine can produce 100 unit, but I'm producing only 60 units. Okay, or I'm producing only 40 units. Then I'm not just underutilizing my machines, but I'm underutilizing my all other resources which is associated with this, which is not good. We always try to use our resources in best possible manner, है ना? So in this case, if you have spare capacity in your organization, it is advisable to transfer your good internally. You are doing this internal transfer. It is good to transfer your goods. It is good to transfer the finished good which you are producing at the minimum price variable cost. Okay, in order to improve the overall performance of the organization. Okay, so in this case, you can see that division G is in more profitable situation. Okay, it is clear or not? Tell me quickly, it is clear or not? Yeah, I got more answer. Division G. ठीक है, Raman. Don't give me all answer, Ravi Teja. We will discuss one by one. Okay, so in this case, division G is more advantageous situation. Raman has said that, ma'am, division R is also in advantageous situation, but yes, comparatively division G is more advantageous situation because he is receiving the goods at cost. Okay, so he is also in advantageous situation. He's saying that. Now let us discuss the next question. Next part of the question. The next part, let me take the next part, this one. We will discuss it one by one. second part is this. Okay. Now tell me, the organization is producing the goods. They are doing the production at 80%. I think I have taken wrong image. Yeah, we should take this image. We will take this later on. First, let us take this image. You can see this image here. We have this image. You can see here this image. Okay. This is the second situation we have. Okay. The company is doing the production 80% of the capacity, means they can produce 100 unit in 1 hour, but they are producing 80 unit in 1 hour. Okay. So they are doing the production 80% of the capacity. Okay. And they are selling, they are transferring to division R 20% of the capacity, and 60% of the capacity they are selling to external market. So it means that they still have 20% spare capacity. They still have 20% spare capacity. Now see the situation, they are transferring the goods at market price. Okay. Now tell me, this transfer pricing means transferring the goods from division G to division R at market price, while they still have spare capacity of 20%, means they still have option to increase the production and to produce 20% more units. They have option to do this. Okay. But they are transferring their goods to division R at market price. Now tell me, this situation is more advantageous to whom? Division G or division R? Who will be more happy? Manager of division G or manager of division R? Okay. Who will be more happy? Okay. Whose performance will be more better? Tell me quickly. This situation is good for whom? The manager of division G or the manager of division R? Tell me quickly. And see, give me the answer by 1, 2, 3, telling me like this. Okay, giving me answer like this. This is related to second portion or third portion. See, we are trying to find who is in more advantageous situation. Means two persons are standing together. Who will be more happy? Manager of division G or manager of division R? Okay, who will be more happy? Okay, we have to decide this. Okay. So in this case, you can see who will be more happy, manager of division G or manager of division R in second situation. Yeah. Chavi is saying that G will earn extra contribution. Okay, let me discuss this. See, they still have option to produce the goods extra 20%. Okay? They still have option. Division G. Okay. The manager of division G will be more happy. Why? Because he still have 20% spare capacity. He still have 20% spare capacity, and for such spare capacity he can do the production and he can sell the goods at variable cost. See, if we have a spare capacity, we can do the production and we can transfer the goods at variable cost. The minimum price is this for us. Okay? Minimum price, this is what we want to recover. Okay? The marginal cost, the minimum cost which we want to recover is variable cost. Okay? If we have spare capacity, we want to recover this. Okay? But it is good if we are recovering the fixed cost, if we are having profit. Okay? If we are transferring it at market price, see, the division G is having profit. Okay? He is recovering the contribution. Okay? So this situation is more advantageous to division G. Why? Because in such situation, see, in this situation, division R can buy the same material from outside the external market. He can buy the material from external market. Okay? But instead of buying the material from external market, if he is buying the material, he is receiving the material from the manager of division G at market price. See, he is this situation, either to buy the material from external market, okay, or receive the material from division G. He is indifference. Okay? He is indifference to this. he can buy the same material from external market or he can receive it from division G. ठीक है, ठीक है. But for the manager of division G, he is recovering the variable cost, he is recovering the fixed cost, and it might be possible that he is having some profit also. Okay, so this situation is more advantageous, and manager of division G will be more happy, okay, if the price is market price. Okay, okay, the price is market price. While in such situation, what happens generally if they both negotiate? Okay, this is the situation. In this situation, since he is recovering the variable cost, fixed cost, and he is having the profit, it might be possible if the price is market price, he might be having contribution or profit. He's earning that. Okay, so the manager of G will be more happy, while the manager of division R, see, if in the organization they have spare capacity, they still have 20% spare capacity, if these two managers, they negotiate with each other, he can negotiate with this, the manager of G, that see, if I will not take this 20% material from you, you cannot sell this material to outside market, you don't have market for your product. He can say like this. Now the manager of R, the manager of division R, he can say to the manager of division G that, see, Mr. Manager of G, you see here that if I will not receive 20% of material of your division, then what happened? You can't sell this material to outside market, because you have market for just 60% of your capacity. Okay, so give me this material less than the market price. Okay, give me this material at variable cost, give me this material at full cost with some markup. Okay, in this way, the manager of R can negotiate. He can ask them to reduce the price. Okay, manager R can ask them to reduce the price. Why? Because they have spare capacity. If he will not buy, if he will not receive this 20% product, there is no market for this 20% product outside. Okay, so in this case, if division G is transferring this good at market price, this situation is very advantageous to the manager of division G. Okay, it is manager G will be more happy. While if you can see here, they both can negotiate, and R can ask the G, manager of G, to reduce the selling price by saying that, see, Mr. G, if I will not receive your material, you don't have option to sell the same material outside the market. Okay, you don't have option to do that. Okay, so please reduce the price. Okay, so in this way, R has option to negotiate with G and ask them to reduce the price. है ना? So see here, if they are transferring the goods at market price, okay, G is recovering the variable cost, fixed cost, even he's having some profit. Okay, so the situation is more profitable. This is a more advantageous situation for G, manager of G. I hope you understand this. I hope you understand this. Yeah, I've got more answer. Manager G will be. Next time when you will give me the answer, write third, fourth like this, okay? So that I can recognize that you are talking about which part of the question. Let us discuss the third part of the question. Let us discuss the third part of the question. This is the third part. Okay, this is the third part. You can see here, this situation is more advantageous for whom? Manager of division G or manager of division R? Ravi Teja. Okay, yes, Ravi Teja, you are right. Okay, now tell me, in this situation, who will be more happy, manager of G or manager of R? Who will be more happy? Tell me quickly. This is the third situation. Write 3 and then give me the answer. Write 3 and then give me the answer. Who will be more happy? ठीक है, who will be more happy? Tell me quickly. Who will be more happy if they are transferring the goods at marginal cost? For 3, write 3, then give me answer. Yes, Chavi, very good. Very good. Ravi Teja, very nice. Very good. Other student, give me the answer. Yeah, I got answer from Jayashri. Okay, Jayashri, your answer is not correct, beta. Let us discuss. For whom this situation is more advantageous? Obviously, the situation is not advantageous for division G because he is just recovering the variable cost. He is not even recovering the fixed cost. Okay? He is not recovering the profit. He is not having profit. Okay, from this transfer pricing. See, actually, transfer pricing is not just some fixed price. It actually vary. Okay, we have minimum price. Okay, we have maximum price. And generally, what happened? Manager of both department, they negotiate with each other and decide the price of the goods in between somewhere. From minimum to maximum, they decide the price of the goods in between. Okay, so this is generally happen and we will study about it later on in this chapter, how to find out the minimum transfer price, how to find the maximum price. Okay, so minimum price is what in any condition the variable cost is the minimum price. You cannot reduce your price below variable cost. I hope you understand. If you are doing the production, okay, you cannot reduce the price of the goods which you are transferring to other division less than the variable cost. You never want to reduce it less than the variable cost. है ना? You never want to reduce the cost less than the variable cost. So this is the minimum price. ठीक है? See, always remember this. This is division G manager. ठीक है? And division R manager. ठीक है? The goods he is transferring to them is selling price for the manager of G, and the goods division R is receiving from division B is cost for them. है ना? The goods which he is transferring, whatever goods he is transferring to division R is the selling price. The transfer price is the selling price for division G. है ना? And see, we always wants to increase our selling price, and we always try to keep our cost minimum. We always try to keep our selling price high. If I'm a seller, I always want to keep the highest selling price. ठीक है? And the buyer, if he is the buyer always want to keep the price less, है ना? Less price, है ना? So in this way, they both will negotiate and they will reach to some price, है ना? He always want to keep the transfer price high, है ना? And the division who is receiving wants to keep the transfer price low, okay, because this transfer price is cost for them, okay. They always keep it low. They always want to keep it low. So they always try to negotiate with each other in order to find, okay, in order to find the transfer price. Okay, so this is all what we are studying here. And if the transfer price is at marginal cost, then obviously the selling price for G is less, है ना? While the cost for division R is less. So if the cost of division R is less, he will be happy. And if the selling price of division G is less, he will be sad. है ना? So this situation is more advantageous to R. Manager of R will be more happy with this situation. I hope you understand. I hope you understand. ठीक है? Okay, Ambika is saying that, ma'am, it is advantageous to G also. because he is at least recovering the variable cost. See, we are talking about more advantages. Obviously, both are happy. But who is more happy with this? Who is more happy? See, we have option to keep our price. See, we will discuss this later on, that transfer price will always vary from minimum to maximum. Minimum price, the buyer always want to keep the price minimum. Buyer means the one division who is receiving the good always wants to keep the price less, and the seller always want to keep it high. है ना? Seller means the division who is transferring the goods, they always want to keep the price high, and the buyer means the division who is receiving the goods, they always want to keep it minimum. है ना? So if you have decided the price in between, both will be high. If you will keep the price maximum, then seller will be happy, means division G will be happy. If you will keep the price minimum, like you have keep the price variable cost, then buyer will be more happy. ठीक है? Though we have option to keep our price in between, we can keep it minimum, we can keep it maximum, we can keep the price in between somewhere, so that both can be happy. See, in this way they negotiate with each other. Now if you go to the market and you want to buy some product, you negotiate with seller, है ना? Buyer and seller, they both negotiate with each other. Buyer want to keep the price less and seller want to keep the price high, so both of them, they negotiate with each other. If the seller sell the product at high price, seller will be happy. If the buyer will buy the product at less price, buyer will be happy, है ना? Buyer will be more happy. Obviously, if the seller is selling the goods at variable cost, at least he is recovering the variable cost, so he is not at in a bad situation, but obviously he will be less happy because he is earning less profit. I hope you understand. Though we have option to keep the price minimum, maximum, or in between somewhere. But if we keep the price minimum, buyer will be more happy. If we keep the price, transfer price maximum, seller will be more happy. Means the person who is transferring, the division who is transferring the good will be more happy. If we keep the price minimum, the division who is receiving the goods will be more happy. And generally, they both negotiate with each other to decide the price. ठीक है? So I think the transfer price cannot be less than marginal cost, otherwise division G will not do the production, है ना? So if you have kept your transfer pricing as marginal cost, then in such situation, the division R, those who are receiving the goods, will be more happy. ठीक है? They will be in more advantageous situation. There'll be more advantageous situation. You can ask me more questions. Let us discuss the next part. Let us do the next part of the question. Fourth part. This one. Now tell me, in this situation, who will be more happy? Manager of division G or the manager of division R? Who will be more happy? Okay, I'm giving you time to understand. This is not 10, this is 20%. Who will be more happy? Tell me quickly. Manager of division G or the manager of division R? Tell me quickly. Okay, write 4. Before giving me answer, write 4. Okay. Then give me answer. I receive answer from Chavi, other student. I'm waiting for other student. In this case, the transfer price is market price. Okay, so who will be more happy? Manager of division G or the manager of division R? Okay, who will be more happy? Manager of division G or the manager of division R? Who will be more happy? Okay, I got answer from Ravi Teja and Chavi. Very good. Other student. Other student. I got answer from Chavi and Ravi Teja. Okay, I got answer from Raman and Gomati. Raman from Delhi and Gomati from Chennai. Okay. All of you are correct. Other student, I'm waiting for other student also to give me answer. Okay, Ambika. She is saying division G. Okay, any other student? Okay, Jayashri, very good. Okay, see in this situation what happened, you can see here that the company is producing 100% of its capacity. Means if they can produce in 1 hour, they can produce 100 unit, they are producing 100 unit. In 1 hour, they are producing 100 unit. Okay. External market for their unit, they have 90% capacity to sell the product in external market. Okay, 90%. But internally, division R is demanding to transfer the goods 20% of the goods. So in this case, you can see here, they have only 10% spare capacity. Okay? They have capacity to produce 100% unit. They have capacity to produce 100% unit. They are producing 90% unit and sell them outside the market. Okay? They have 10% spare capacity. Those 10% spare capacity, they can sell at variable cost. This is the minimum price they can offer. Division G, the minimum price division G can offer. See, though division G always want to transfer their goods at market price, hai na? That is maximum price. Maximum price. Division G will be happy if he managed to sell the product at market price. Hai na? Okay. So, in this case, you can see here, division R is demanding 20% of the capacity. So for transferring the goods 20%, he need to hamper 10% of its production. So on that 10%, he is earning profit. Okay? He is earning profit. So that profit he want to recover from here. Okay? So in that case, he will consider the cost he is incurring plus the opportunity cost. We will say this as opportunity cost, the cost he is losing for transferring the goods internally. Okay? He want to recover that. See, if he is hampering his 10% production, now he can sell 80% of the goods. He is hampering 10% of the production. On that 10%, he is losing some profit. है ना? If he can sell 90%, but he is selling 80% of the product, he is hampering 10% of its sale. Out of that 10%, he is incurring some profit. And if he want to transfer this 10% internally, then he is losing that profit and he want to earn that profit internally. Okay? So maximum price for this should be the cost plus opportunity cost. Means if the price is market price, obviously the manager of division G will be happy. Okay? Division G will be more happy. Okay? Though for spare capacity, there is 10% spare capacity. For that, R can negotiate to transfer that good at variable cost. Okay? He has option to do that. But if the transfer price is market price, obviously the situation is more advantageous to G. Okay? I hope you understand. Okay? If you have any doubt, you can ask me. Okay? So you can see here, obviously the situation is more advantageous to the manager of division G. The manager of division G, the situation is more advantageous to him. Okay? I hope you understand this. Now you can see here that we have option to consider the transfer price as market based, means considering the market. Okay, at what price we can sell our goods in the market and then decide the transfer price. Or we can negotiate two manager of two division, they can negotiate with each other and then they can decide the transfer price. They have option. Okay? They have option to transfer the goods at market price. Okay? If you are transferring the goods at market price, obviously the seller, the person who is transferring the goods will be more happy. Okay? And other points are that you can transfer the goods at marginal cost, standard cost, full cost, and cost plus markup. Now see, in all these cases, you can see here that while deciding the transfer price, I hope this is what we have discussed already. While deciding the transfer price between two division A and division B. While deciding the transfer price, we will consider the minimum price and the maximum price. Okay, the minimum price and the maximum price. Okay, and negotiation means the two party, manager of A and B, they will negotiate with each other and decide the price in between, because obviously division A wants to keep the price maximum and division A wants to keep the price maximum and division B always want to keep the price minimum. So there is need to negotiate between them. Okay, and after negotiation they will decide the transfer price, है ना? They can decide the transfer price. So this is one method. Another method is to consider the market price. Market price will be the maximum price. Okay, and other points are considering the cost. Okay, either to recover the marginal cost, means variable cost, or standard cost, or full cost, or cost plus markup. Okay, we have all these options, okay, with us. I hope this picture is clear to all of you. This condition is clear to all of you. Okay, I hope it is clear to all of you. Now we have the situation. Okay, we will consider everything. Now we have this situation here. Let us first consider this situation. This situation means deciding the transfer price at market, considering the market. Okay, at market price we are transferring the goods. Though if you want to consider the price at market price, obviously the division B, those who are receiving the goods, will not be happy. Okay, but if the transfer price is at market price, market base, then how will we do the calculation? We will consider this. Okay, for example, here we are considering the transfer price as market price. Then how will we do this calculation? Okay, how will we do this calculation? So let us first consider what are the advantage if we consider the market price. This will be unbiased. Unbiased, why? Because obviously you can consider the demand and supply rule, and after considering the demand and supply rule, you can find the market price. Okay, so this is unbiased. You cannot manipulate. Obviously division G wants to earn more profit. Okay, obviously division R, manager of division R wants to earn more profit. Both of them want to earn more profit, because on the basis of the profit they are getting their bonus, commission and all. Okay, so for that obviously they can do some manipulation. Obviously this person want to keep the transfer price high. This person, the manager of division G, always wants to keep the transfer price high. Obviously the person division R, manager of division R, wants to keep it low. Okay, so in this way they can do some kind of manipulation. So if you will consider the market price, it will help you to reduce any kind of manipulation. Okay, so we consider all these situations, but let us first do a question related to this, and then we will consider more point related to this. We have another option. To shared profit relative to cost-based transfer pricing. This is what? Deciding the transfer pricing between two division in such a way, division A and division B, we will decide the transfer pricing in such a way so that the overall profit is distributed between them. Okay? See, for example, if the organization is having selling price of the goods and the cost of the goods, we consider this cost and this selling price. This is just for internal transfer and internal performance. Okay? Considering the selling price and cost, we will get the profit of entire organization, and those profit can be distributed between division A and division B. Okay? Accordingly, transfer price can be calculated. Okay? The overall profit of the organization can be distributed between division A and division B, and accordingly the transfer price can be calculated. Okay? So here the transfer price is calculated based on the profit of the organization, which is distributed between the division on the basis of the cost. Okay? These are the two methods of finding the transfer pricing. Okay? Considering the market price or distributing the overall profitability between the divisions. Okay? We will understand this with the help of an example we have. Okay? Let us consider that. Okay, we have this example. I want all of you to first read this question, this example. I'm giving you time to read this example. I hope you can read it. Wait. Yeah, this question. Please read this question. We have this question. I'm giving you time to read this question. Okay? I'm giving you 4 minutes, 4-5 minutes to please read this question. Okay? Read this question. Read this question. And in case if you have any doubt, you can ask me in between. And I want all of you to please just read it. Okay? Try to read this question. Try to understand this question. Then we will discuss this question. Okay, Ambika is saying, ma'am, transfer pricing based on profit distribution can be discussed again. See, Ambika, we will discuss that topic with the help of this example. We have this example. Oh, let me see. We have this example, and with the help of this example, we will understand both transfer pricing based on market price and transfer pricing in which we are distributing the profit. Okay, we have this example, and with the help of this example, we will understand this. Okay, so I want all of you to read this question first. Read this question quickly. And in case if you have any doubt, ask me. Okay, ask me. In case if you have any doubt, you can ask me. And if you have done the reading, please let me know that you have done the reading of this question quickly. If you have done the reading of this question, quickly tell me. I'm waiting for you. Quickly tell me if you have done the reading of this portion, this question. Quickly tell me if you have done the reading of this question. Okay. From Raman, you have done the reading? Good. Let us read this question. Let us read the question. This question. A manufacturer of cornflakes has two divisions, one producing the cornflakes and another packaging division that manufactures the cartons. Okay? So they have two divisions. One is doing the production, and another one is producing the cartons they have. Okay? So one is for doing the production and another one is a packaging division, those who are those who are manufacturing the cartons. Okay? The production division purchase all the cartons from the packaging divisions. Okay? So this is the production division which we have. This production division is buying all the cartons from the packaging division. Okay? Cost of the cartons from outside vendor would be, now see, if instead of buying the cartons from the packaging division, they are buying the cartons from the market. Okay, instead of internal buying, if they are buying it from the market, the price of the carton, if they are buying 5,000 number of the cartons, their price will be 77,000. And if they are buying 8,000 of the cartons, the price of the cartons will be 95,000. This is the market price. Okay, from the market they can buy it at rupees 77 if they are buying 5,000 cartons, and if they are buying 8,000 cartons, they can buy 95,000. Okay, this is the market price we have. From the market you can buy it at this price. Okay. Now next, production costs incurred by the packaging division for similar volume of the cartons. Now, production cost, the cost here they are incurring, the cost, actual cost the packaging division is incurring for producing these cartons. For producing 5,000 cartons, they are incurring 75,000 cost internally. And for producing 8,000 cartons, they are incurring 80,000 cost internally. These are the costs which they are incurring internally within the organization. Okay? So it means this is the market price, that if this production department do not buy the cartons from the packaging department, and if they want to buy this carton from the market, so this will be the market price, okay, for them. And if instead of buying the product from the market, they want to buy the product from the packaging department, so what is the cost this packaging department is incurring? If they are producing 5,000 unit, they're incurring 75,000. If they're producing 8,000 units, they are incurring 80,000. These are the cost of packaging department. Okay? Packaging division. These are the cost. Now let us proceed. The production and sale of the final product. See, the final product is what? Inside the cartons, the cornflakes inside the cartons. This is the final product they have. Okay? Cornflake inside the cartons. This is the final product they have. Okay, the production and sale of the final product, cornflakes, are this. For the 5,000 unit, sale value is this, packed in cartons. Cornflake packed in carton, the sale price is 2,000, 2 lakh. Okay, for 5,000 units. And if they are selling 8,000 units, the sale value is 3 lakh. The total cost, excluding the cost of the carton. So it means that this is the cost of production of the cornflakes. Okay, so this is the cost of the production. Okay, means the cost they are incurring at this place. Okay, and if you want me to do like this, I don't have option to do like this. Wait. So let me write the cost they are incurring actually. I want to write the cost for 5,000 units, for 8,000 units. Okay. Packaging cost. What are the packaging cost? They're incurring 75,000 and 80,000. 75,000 and 80,000. These are the packaging costs they are incurring. These are the packaging cost. The cost of the cartons, production of the cartons they are incurring. Then cost of the production of these cornflake are 1,20,000. And what? 1,80,000. $1,80,000. This is their cost. Cost of production division. These are the cost of production division. Now, what is the selling price of the final goods which you want to sell in the market? 2 lakh and 3 lakh. So I can say here that this if you want me to consider, we have 4 different cases here. ठीक है, we have 4 different cases here. Now let us consider first part of the question. An appropriate transfer pricing policy is being framed as the corporate management accountant calculate the transfer pricing based on shared profit relative to cost method, and second point is market method. So in this case, you have two method. One is to share the profit between divisions. Okay, share the overall profit of the organization between two divisions and find the transfer pricing. Second is consider the market method. Okay, so we have 4 questions here, 4 types. This example can be divided into 4 types. Then you have to discuss the effect of the methods. Okay, whatever the cases you have to discuss. You will calculate the profitability of each division. Then you have to discuss all those methods which you have here. Okay, now first you tell me, can you do this question at your own? Can you do it at your own? Can you try to do this question at your own? Transfer pricing, deciding the transfer pricing, considering the shared profitability, okay, sharing the profit between them on the basis of the cost. Can you do this? Quickly tell me, you want to do this at your own, or you want me to discuss? Quickly, you want to try this question at your own? Quickly tell me, you want to try this question at your own first? Quickly tell me, I'm waiting for you. You want to try this question at your own first? Or you want me to do this question? Quickly tell me, I'm waiting for you. Very easy question. Okay, you have to give me the transfer pricing. We have to find the transfer pricing, and we have 2 cases. In first case, we have to consider transfer pricing by shared profit. Okay, and second is by market price. No answer? Quickly tell me, you want me to do this, or you want to do it at your own first? We will try. Okay, try first. Try it at your own first. Then we will discuss. See, I will give you hint. Okay. First, we know the selling price of the final good which we have. We have the selling price. We have the cost of production department. We have the cost of packaging department. So in this way, considering the selling price and cost, we can find the profitability for the 5,000 unit, and we can find the profitability, overall profit of the entire organization for both 5,000 and 8,000, both 2 cases. We have 2 cases here. Okay. Okay, we have find the overall profit. Then that profit, okay, whatever the profit you have, you can distribute that profit to division, these 2 division. Whatever the profit which you have here, you will calculate here. You can divide that profit to these 2 division, packaging division and production division. Okay, so you will consider this cost of production plus profit. Considering the cost of production plus profit, you can determine the transfer price, because at this price we will transfer the goods to the next division. Okay, it is very easy. I want all of you to do this at your own. Try it at your own. Okay, please try it at your own. First, find the overall profitability. First, find the overall profitability. How? We have selling price of the final good which we have. Okay, final good, selling price of the final good which we have. We have the cost of packaging division. We have the cost of production division. So in this way, subtracting the cost from selling price, you can find the overall profit. That profit you can apportion on the basis of the cost. This is the ratio at which you can apportion the overall profit which you have calculated, apportion them on the basis of these 2 costs. Okay, profit. Now cost plus profit will become the transfer pricing for the cartons which you want to transfer to production division. Sorry. Quickly do this and tell me. Then we will do. Okay, I want all of you to try it at your own first. Okay, Ambika and Ravi Teja are saying that they want to try this question. Try it. Okay, try to do this. Very easy. Try this at your own, then we will discuss. Try this. Quickly tell me the answer. Quickly tell me the transfer pricing which you have calculated here. Okay, I got answer from Ravi Teja. Very good. Okay, very nice. Ravi Teja, calculate the same for 8,000 unit also. You have calculated this for 5,000 unit. Do the calculation for 8,000 unit also. Other student also, please tell me that it is clear or not. Okay, tell me quickly. What you have to do, first find the overall profit of the organization in both the cases. Okay, then apportion that profit in these two division on the basis of the cost. These costs will be ratio. On that ratio, apportion this profit to these two division. Okay, so the cost plus profit will be the transfer price of the goods which you want to transfer. Okay, 5,000 units which you want to transfer. Quickly tell me you are doing or not. You want me to do this question? Okay, Jayashri, I receive answer from Jayashri. Very good. I guess your answer is not correct. I think transfer pricing. I don't know. See, answer, this value is not correct, I think. Jayashri, what we have to do, see, let me give you a hint for doing this question. Let me give you a hint. First find for 5,000 unit and for 8,000 unit. These are two different cases we have. First find, we have the selling price 2 lakh. Okay, and here we have selling price as 3 lakh. Okay, this is the selling price which we have. Then what will we consider? The cost of production and the cost of packaging. Cost of packaging, the cost of the cartons, production of cartons, packaging is what? 75,000. And the cost of production of cornflakes is what? 1,20,000. So this is the case of 5,000 unit. You can calculate the profit here. The profit which you are earning, you can calculate. This is the overall profit of the entire organization. Okay. Similarly, cost of packaging for 8,000 unit and cost of production of the cornflakes. Okay, consider those two costs, 80,000, 1,80,000. Okay, so in this way you can calculate the overall profit here also. Okay, now apportion this profit to two division. We have packaging division, we have packaging of cartons. Okay, then we have production division. Apportion this profit on the basis of the cost you have. Cost is what? 75,000 and 120,000. So 75 is to 120 is the ratio on the basis of which you can apportion the profit which you are having. है ना? Apportion the cost. Sorry, apportion the profit. Similarly, apportion the profit which you are incurring here. Okay, which you are earning here on the ratio of 80 is to 180 or 8 is to 18. Apportion the profit on the basis of these ratio. ठीक है? Please tell me the profit in these two cases. Apportion the profit. Chavi, Ambika. Okay. Okay. Can you give me the profit at this place? I think this is 5,000. And at this place, profit is 40,000. Apportion this profit on the basis of the cost. We apportion the profit on the basis of cost. So apportion the profit here on packaging and production department. We will first apportion this 5,000 on the ratio of 75:120. Apportion them, and you will get what? You will get the value for packaging. You will get 1923 value, and for production you will get 3077 value. Similarly, apportion this 40,000 for 8,000 unit. Apportion this 40,000, and you will get for packaging you will get 12308, and for production you will get 27692. Okay, these two value you will get, these two value. Okay, these two value you will get, these two value. So this is the portion of the profit which packaging department is earning. What is the cost of the packaging department? 75,000. See, for packaging department, what was the cost? For 5,000 unit, the cost of packaging department was 75,000. Okay, the cost of packaging department was 75,000, and they are earning profit. How much? They're earning profit 1923. 1923. So this cost plus profit can be the transfer price for these 5,000 units. So in this way, add them, divide them by 5,000, you can find the transfer price per unit. Similarly, 80,000, add the portion of the profit 1230 for packaging department. This is for the packaging, this is for the production. So here you will add 12308. 12308. This is the portion of the profit. Sorry. This not, we want to calculate the transfer price. 120308. Yeah, 308. 12308. So in this way, you can find the transfer price. Okay. How are we considering, how are we finding the transfer pricing here? Cost plus profit. We have considered here the cost because it is mentioned in the question. Cost of producing the cartons is given. Okay, for 5,000 units, 75,000, and for 8,000 unit, 80,000. This is the cost of producing the cartons. And for deciding the transfer pricing, they are saying that a portion, they are saying that share the profit, share the overall profit of the organization. So we have first find the overall profit of the organization, and then we have shared that overall profit between the two division of the organization. We have find the profit of this packaging division, this division who is manufacturing cartons. We have found the profit. So cost plus profit will be the transfer price of the goods. Okay. For 5,000 we have calculated this. If we will divide them with 5,000, we can find per unit transfer pricing. ठीक है. Similarly, you can find the transfer pricing for 8,000 unit. Give me the answer. Transfer pricing per unit in both the cases. Give me the answer. Give me the answer. So in this way, you can calculate the transfer pricing for both the cases. I hope you got this. Give me transfer pricing per unit for both the cases. Okay. For 5,000, I receive answer from Ambika. Please tell me the answer for 8,000 unit also. Ambika is saying that this value transfer pricing per unit will be 15.38. How she has calculated this? She has added 75,000 plus 1923. Okay, she has added these two value and divided with 5,000. So in this way, she found the transfer pricing per unit. Okay, which is 15.38 for 5,000 unit. Calculate the same transfer price for 8,000 unit. Quickly tell me. Transfer price for 8,000 unit. Quickly tell me. Okay, from Chavi. Okay, Chavi is saying that transfer price is 11.54. This is the transfer price, 11.54. 11.54 is the transfer price. How she has calculated? 80,000 plus 12,308 divided by 8,000. Okay. I hope it is clear to all of you. I don't want to solve the entire question. I just want you to do this question at your own. Okay. Do this question at your own. Okay, Ambika is asking me, ma'am, what if they will ask us to transfer only 60% of the carton? See, in that case, we will see their own capacity, the capacity they have to produce the cartons, and how much they are producing, whether they have any spare capacity. We will consider all those things. Then we will find the minimum pricing and the maximum pricing. Okay? But here, we will not apply our brain. They have simply mentioned you in the question that consider the cost and apportion the profit and find the transfer pricing. So find the overall profit, apportion that profit, consider the cost and the profit, and find the transfer pricing. This is what they have mentioned you. Don't apply your brain then. Okay? Otherwise, in other question, we will see their own capacity, how much they are producing out of their capacity, and all many other things. We will do this later on. But in this question, they have clearly mentioned you that apportion the profit, share the, sorry, it is clearly mentioned in the question that share the profit and decide the transfer price. Means first consider the overall profit, then that profit should be apportioned in division, and then find the transfer price. Now tell me, it is clear to all of you or not? You want me to do it completely, or it is clear to all of you? Please tell me quickly. Please tell me quickly, it is clear to all of you or not? 11.54. Okay, Ambika, for that we will consider the information which we have in the question. We have many conditions will arise, but we will do all those things one by one. We will understand everything one by one. Don't worry about it. Okay, is it clear to all of you or not? Quickly tell me it is clear to all of you or not. It is clear. This is the method of finding the transfer price based on share profit. Okay, we are sharing the profit between the divisions. Okay, we are sharing the profit between the divisions. Yes, ma'am. Okay, it is clear. Okay. Other student, where is Ravi Teja? I think he is doing the next portion of the question. Ambika, other student. Jayashri, your answer was not correct. Now tell me it is clear to you or not. Jayashri Lakshmi, please quickly tell me it is clear to you or not. Raman, okay, you have. Okay, you have given me answer, but your answer of second portion is okay. It's correct. Very good. So you all have given me the answer. Very nice. Very nice. Very good. Now let us do the second portion of the question. Let us do the second portion of the question, which is what? Okay, I need to clear all these things. No, I don't want to clear it. We will use this information for taking decision. Now see, second method is to find the transfer price based on market method. Okay, we will find the transfer price on the basis of a market method. Okay. Now in this case, what will happen? We will consider the market price and on the basis of which we will decide the transfer pricing. Okay, ji. So for deciding the transfer pricing here, let me copy this image. Let me paste it here. Yeah. You can see this image. Now they are saying that transfer pricing, this transfer pricing is market price of the cartons. What is the market price? Market price is the transfer price. So in this question, you can see we have the market price of the cartons. Okay, for 5,000 the market price is 77,000 and for 8,000 the market price is 95,000. So this is the transfer price. Okay. See, market method transfer prices on the basis of market method means the market price will be the transfer price. Now, what will be the transfer price for 5,000 units? For 5,000 unit, transfer price will be what? 77,000 divided by 5,000. This will be the transfer price per unit. Give me the answer. 77. And for 8,000 units, what we have? 80,000. So this is the transfer price per unit. These are the transfer price per unit. And now you can find the profit of packaging division and production division and overall profit of the organization. This will be your transfer price. Okay, 77,000 divided by 5,000 will be the transfer price for the cartons transferring 5,000 units. Is it 15.40? Is it? Quickly tell me. Yeah, it is. Okay. Now let's see how to find the profit of the organization. How to calculate the profit? See how to calculate the profit of division. We will consider the transfer price as the selling price. We know that, है ना? For packaging division, what is the transfer price? 77,000. Okay. Now cost of production of cartons is what? Cost of production of carton is given here in the question. Cost of production is 75,000 for 5,000 unit, 80,000 for 8,000 unit. So this is here 75,000. So this will be the profit in case if you are producing 5,000 unit. Okay. Now see here, For the production department, what is the selling price? The price at which they are selling the goods to the market. Selling price. See the selling price. Selling price is 2 lakh. Selling price is 2 lakh. Okay. The price at which they are receiving the goods is their cost. है ना? Transfer pricing, which is 77,000. And the cost of production of the cornflakes, cost of production is what? The cost of production we have here is 1,20,000. Okay, this is 1,20,000 we have here. So in this way, you can calculate the profit for production division. You can calculate here the profit of packaging division, and you can calculate the profit of production division in case if you are producing 5,000 units. How many units? This is my calculation for 5,000 units. If we are doing the production of 5,000 units. Okay. Similarly, you can find the profit if you are producing 8,000 units. Quickly tell me the profit in both the cases. And I hope we have calculated the transfer pricing. Okay. Transfer price will be the market price of the goods. Okay. So these are the situation which we have. Quickly tell me the answer. Tell me the answer quickly, quickly. Oh, very good. Chavi, Raman. ठीक है. Ravi Teja. ठीक है जी. You can calculate the profit of both the divisions. This is the calculation which we have done. We have done this calculation for 5,000 units. Similarly, you can calculate the profit if you will produce 8,000 units. Okay. Similarly, you can find the profit if you will produce 8,000 units. Very easy. Very easy. Easy to understand. Okay. I hope it is clear to all of you. Now, the next portion of the question. First, tell me you have done very good. I received so many answers. Ravi Teja, Raman, Chavi, very good. ठीक है. Very nice. Okay, so you have done the calculation for 5,000 unit. You have done the calculation for 8,000. Come on, calculate the value for 8,000 unit also. I'm waiting for you. I have received the answer from Ravi Teja. Very nice. Come on, other student, do it quickly. Is it clear or not? The question is clear or not? Tell me. Question is clear or not? Quickly tell me. Okay, now let us discuss further. I'm waiting for you to reply me. Okay, no reply, no reply. Okay, now let us proceed forward. See, the next portion of the question. Let us discuss the effect of both the method on the profitability of the division. Now tell me, how deciding the transfer price based on market price, deciding the transfer price based on share profit, how this will affect the profitability. Tell me how this will affect the profitability. In which case, each division, packaging division and production division, are incurring more profit. See, overall profit of the organization will remain same. This is what we have discussed previously. See, somewhere we have discussed, yeah, we have discussed here, transfer pricing between the division will not affect the overall profit of the organization. So the overall profit of the organization will remain same, no matter what method you will adopt here to decide the transfer pricing. Okay? So the transfer price will only affect the profitability of these division. And on the basis of the transfer pricing, the profitability may vary, and accordingly, the manager of the division will get reward. Obviously, the manager want more bonus commission, obviously. He want to show his performance as best performance, obviously. Okay? So for that, we need to consider this transfer pricing. Otherwise, it's of no use to consider it for the overall profitability of the organization. Now see, yes, but when we will consider the situation of buying the product from external market, then obviously, then yes, that condition will affect the overall profitability. We will discuss that later on. Okay. Now here, you have to take the decision how deciding the transfer price will affect the profitability of the division. Give me the answer. I'm waiting for you. Quickly tell me how transfer pricing, deciding the transfer pricing. See, the transfer pricing is different in both the condition. Let me write it somewhere. Let me write it. In case if you will adopt share profit and market price for 5,000 units and for 8,000 units. These two units. Okay. What are the transfer price? Market price. I hope this is 15.38 and it is 11.54. And no. This is 8 and 40. This is 15.38 and 11.54. So you can see here that if you will follow share profit method, the transfer price is less. And if the transfer price is less, then obviously the profitability will be less in this case. If the transfer price is more, obviously the profitability of the division will be more. Okay. So you can see here this condition. Also, you can see here that the transfer pricing is less in case if you are following share profit method, and the transfer pricing is more if you are following market price method. So in this way, you can write all these things. Okay. And they are not getting the benefit of economy of scale. Whether they are getting the benefit, see, if in case what is the economy of scale? With increased production, the cost is reducing. With increased production, if you are producing more goods, the cost per unit is reducing. Okay, so this is what you will check, that whether the cost per unit is reducing or not. Okay, all these things you will check, and accordingly you can write it. Okay, so I hope this is clear. And let us proceed forward and do the next question. Okay, right. Okay. See, so that is why I have written it here, so that you can compare them. Okay, which transfer pricing is more? Okay, so obviously if the transfer pricing is more, the profitability will be more. Okay, so obviously in this case, the packaging division will get high profit. Okay, now it is clear. Let us proceed forward. आगे चलते हैं. The next question. I hope you understand transfer price based on market price, transfer price on share profit method. Okay, you asked me to discuss that. With the help of this example, we can understand that. Now, the next portion of the question. See, I have two questions to discuss. So I don't want to take break. In case if you want to take break, tell me. We have three questions to discuss. Okay, so I don't want to take break. Okay, I want all of you to read this question. Okay, I'm giving you time to read this question. Read this question. Try to give me the answer. Read this question at your own. And I'm giving you 4-5 minutes to do this question at your own. Okay, do this question. Do this question. This is the question where we are deciding the transfer pricing based on market value. Okay. So I want all of you to do this question at your own. Okay. Try it at your own, then we will discuss. Try to do this. Read this question. Give it time. Read it carefully. Read each and every line carefully. And if you have done reading, let me know. You have done the reading of this question. Read this question and let me know. Read it. Try to do this question at your own. And if you have any query, you can ask me. If you have any query, anything which you want to ask, you can ask me. Very easy question, but I want all of you to try it at your own. Try this question at your own. Give me the answer. Tell me the answer. You have done this question or not? Okay, I receive answer from Raman and Ravi Teja. You have done the reading. Can you do this question at your own? Can you do this question at your own? Let us discuss this question, then we will see. Okay. See, G.R. Ermina is an Italian luxury fashion house which design, manufacture, distributes, and retails ready-to-wear leather jackets. In 2016, estimated sale of the company were around $2.65 billion. GR Ermina announced that his company will revamp two of its fashion labels, Ermina Shrug and Ermina Jeans, as part of the restructuring process of his company. GR company has two profit center, A and B. Profit center A sell half of its output on the opening market. Sorry, A sell half of its output on the open market and half transfer to profit center B. ठीक है जी. See, I have any diagram? No, I have not made any diagram here. Okay. Wait. So we have division A and we have division. We have these two division A and B. And he's saying that half of the product he's selling outside the market and half of the product he's transferring to division B. Okay. So you can see here the units which they are transferring, the output which they are transferring to division B, because they are transferring half. Okay. So you can see here the information you have here: external sale, cost of production. External sale and cost of production. So if in case A is selling externally 8,000, it means that if they are selling 8,000 externally, it means that they are transferring 8,000 to division B also, because it is clearly mentioned. See, I have underlined this line. A sell half of its unit to open market. Open market means external market. He's selling half of the unit to external market and half to B. Half to B means what? Half of the unit. If he is selling 8,000 unit to external market, means 8,000 unit he is transferring to division B. Okay. Now cost of production is this. For division A, cost of production is what? 12,000. Okay, 12,000. See, the selling price, external market selling price is 8,000, and the transfer pricing he is getting revenue from transfer pricing is 8,000. So these two are the revenue. This is the cost. So here you can calculate the profit of division A. Okay. Now see, B is selling their product to external market for B is selling price for B is what? 24,000. Okay. And cost of production is what? See, he is receiving 8,000 units. So we will consider this 8,000 unit here. And cost of production is what? 10,000. We will consider this also. So in this way, we will consider the selling price and the cost, and we will get the profit. So we will get the profit of division A, we will get the profit of division B, and we have got the transfer price of the units which we are transferring. So what is the requirement of the question? What are the consequences if the company decide to set the transfer price at market value? See, this is the market value. This is the value at which he is selling the product in the market. Okay, in the market. So similarly, at the same price means the market value. If they are transferring the goods at the market value, what will be the profit they will earn? Okay, division A. What is the profit division A will earn, and what is the profit division B will earn? So in this way, we can calculate it. Very easy question. Very easy. Okay, very easy. I want all of you to read it again if you want to read it. Okay, calculate the profit of each division. Give me the answer. Okay, it's very easy to do this question. Very easy. Okay, I got answer from Chavi and Ravi Teja, other student. I'm waiting for other student also to give me the answer. You can try it at your own also. Okay, read it again. This line is very important. The line which I have underlined here is very important, and I want all of you to read it very carefully. It's very important. Read it. ठीक है? Do this question at your own. I want all of you to do this question at your own. Very easy question. ठीक है? And the entire solution is based on this line only. Entire solution. Do this question at your own and tell me, shall we proceed forward? Do you want break? Tell me. If you want a break for 5 minutes, I can give you. Or shall we proceed forward? Quickly tell me. Quickly tell me. Shall we proceed forward? Do you want break? Want a break? Tell me quickly if you want a break. I can give you a break of 5 minutes. We have 2 more questions to discuss. Though, done this question or not? You understand this question? You have done this question? Quickly tell me yes or no. Okay. You have done this question. You want me to proceed forward? Quickly tell me yes, no. Okay, profit is for means you still doing this question. You people are still doing this question. Okay, I'll wait then. Okay, you need break. Okay, no problem. Okay, let us take a break of 5 minutes. Okay, but let me tell you the question which we will discuss later on. I want all of you in between. If the student don't want break, you can read this question. Okay, we will discuss this question after break, and we will discuss this question also. So if in case if you have done the reading of one question, you can read the another question. I want to cover both the question in today's session. Okay. So those who want break, they can take. Otherwise, student can read this question. Okay, we will discuss this question, this entire question. I'm giving you 5 minute break. Okay, in that break, I'm expecting you to read this question. Okay, otherwise you can go for break also. Do this question. So 2 more questions to do. So let us start the session. I hope I'm audible and visible both. Let me check. Yeah, I'm audible and visible. So we have discussed the transfer pricing based on market value, market based, and we have discussed the transfer pricing where we are sharing the profit, the overall profit of the business organization on the basis of the cost. Okay, now we will be discussing about cost based transfer pricing where we will decide the transfer pricing based on marginal cost or based on standard cost or based on full cost. Okay, we will consider them, or based on cost plus some markup. Okay, we will consider them. Okay, we will consider the case where we will consider the transfer pricing between division A. We have a division A, for example, and a division B. Okay, the transfer pricing, the condition where we will consider this transfer pricing as marginal cost or variable cost. Okay, the transfer pricing where we will consider this as standard cost. The transfer pricing where we will consider them full cost, means the variable cost and all the fixed costs which you are incurring, you will consider all the costs. Okay, then transfer pricing cost, full cost plus some markup, like we have done first example, full cost plus some markup. Okay, so we will consider all these conditions and accordingly we will do the questions. Okay, I'll not discussing them in detail. We will discuss this later on in next class. Okay, now see here, this is what we have already discussed. Okay, and we will discuss it more in detail while doing the questions. That for deciding the transfer price, we consider two things. What? There will be some minimum cost. Why minimum cost? There will be some maximum cost. Why maximum cost? Because the division who is transferring the goods, means the seller or the division who is transferring the goods, always wants to charge high. Okay? And the buyer or the division who is receiving the goods always wants to charge minimum price. Okay, so they will negotiate and accordingly they will find the price. Okay, they will negotiate. Negotiation based transfer pricing is also done by the manager of different division. Okay, so we will find a range of price. Okay, we will find the minimum price, we will find the maximum price, and in this way we will try to find out the range of price. Okay, and we will give this in answer that the manager, according to their own situation, considering all the situation, they can find the price in between somewhere. Yeah, so we will do that. Now let us see this question. Let us do the questions which we have. Okay, and let us try to understand the concept with the help of the questions. Okay, instead of doing the theory, let us try to understand the concept with the help of the questions which we have. So I have given you time to read this question, and again I'm giving you time. See, this graph will help you, this image will help you to understand the question. Okay, always while doing the question in examination, try to make such image. Okay, while doing the question in examination, always try to prepare such kind of image if you can make. Okay, this will help you to understand the question in better way. So read this question, then we will discuss this question. Okay, read it. Read it. And if you have done the reading of this question, please let me know that you have done the reading, and we will discuss that then later. Shall we discuss quickly? Tell me. Shall we discuss this question? Quickly tell me, huh? Very easy question. Let us read this question. Marani Limited has two divisions, Division A and Division B. Division A and Division B. Division A produces product Z. So this division, they produce product Z, which it sells to external market and also to Division B. So they are producing product Z and they are selling this product to the market, and also they are transferring this goods to Division B. Okay. Divisions in the Mariani Limited are treated as profit center. So these divisions are treated as profit center, and divisions are given autonomy to set the transfer price and to choose their supplier. So they have the power to decide the transfer price and to choose the supplier. Okay, both the division have this right. Performance of each division measured on the basis of the target profit given for each period. Okay. So you have to measure the performance of each division, and for that you will consider the target profit also. Okay. Division A can produce 1 lakh unit of product Z at full capacity. So their capacity is 1 lakh unit. Okay. The capacity of Division A to produce product Z, the capacity is 1 lakh. Okay. Demand for product Z in the external market is 70,000. Okay, so the external market demand is 70,000. Okay, and the selling price for this is 25,000. To produce product Z, Division A incurs 1,600 variable cost. The company is incurring variable cost for producing product Z to sell it in the market for rupees 2,500. They are incurring variable cost of rupees 1,600. It is mentioned here. Okay, and the fixed cost is this 400 lakh. Okay, Division A has employed working capital of 1,200 lakh. Okay. Working capital is financed by cash credit facility provided by the lender, and the interest rate is 11.50 per annum. Division A has been given a profit target of this. So see, the Division A has a profit target of this. This is their profit target. Division B has found two other supplier R and S. Division B, apart from Division A, they have found a supplier R who can supply the same product Z. And they have found another supplier R and S. Okay, who can supply this product Z to them. Okay, who are agreed to supply product Z to them. Division B has requested to quote the price for 40,000 units of the product Z from Division A. Now, before deciding the transfer price of the goods, always check few things. What are those things? First, check the capacity of Division A. Capacity. How many units they can produce? Okay, check their capacity. Then check how many units they are actually producing. Okay, check how many units they are actually producing. See if there is any spare capacity. They have spare capacity. Capacity is spare. Okay, in case if they have spare capacity, then the minimum transfer price will be variable cost. Okay, for that spare capacity. Okay, if they want to produce and sell the units of spare capacity, they can sell it at variable cost. So in this question, you can see here that they can produce they have capacity to produce 1 lakh unit. The external demand for their product is 70,000. They are producing and selling outside the market 70,000. So 30,000 extra spare capacity they have. But division B is demanding 40,000 unit. Means they have the spare capacity 30,000 for which they can produce the goods for division B. But for extra 10,000 units, they have to hamper their external market sale. Okay, means the profit which they are earning from here, they want to recover from division B. They want to recover that price from division B. Okay. So these are the conditions which you should first consider. The capacity of division A, actually unit which they are producing, check whether they have spare capacity. If yes, then yes, okay. For spare capacity, they can transfer the goods at variable cost. But yes, they have only spare capacity of 30 units, while the demand for division B is 40,000, means we need 10,000 extra unit. For that 10,000 unit, they have only capacity of producing 1 lakh unit. So for that, they have to hamper their external market by 10,000. Means now they will sell externally 60,000 unit. They will hamper 10,000 production. And for that 10,000 production, they will supply to the division B. Okay. So accordingly, you will decide the selling price. Now let us consider the requirement of the question. Let us consider the requirement. Calculate the transfer price per unit of product Z that division A should quote in order to meet the target price of the for the year. Okay. Now in this question, they are asking you requirement of the question to calculate the transfer price. They're asking you to calculate the transfer price. And for calculating the transfer price, they're asking you to consider the target profit. Okay. Consider the target profit for the year. They have set the target profit for division A, that the division A wants to earn this profit. So accordingly, find the transfer price. Okay. Now I'm giving you time to think how to do this question. Okay. Think about it. Try to do this question. See, before deciding the transfer price, you have to consider, you want to recover the variable cost, you want to recover the fixed cost, okay, all the cost, and you want to recover the profit. This is the target profit. After recovering all these things, you will decide the transfer price. Okay. Do this question. I'm again giving you time. If you want, you can read this question again, understand this question again, and try to do this question at your own. I'm giving you time. Do this question. Okay. They want to recover the cost, they want to recover the profit, then they will decide the transfer price. So try to do this question at your own. Don't see the answer. Do this question. Can you do this question? See, in the first question, they have asked you to recover your profit. Okay, so you will recover the cost and you will recover the profit, then you will find the transfer price. Okay, so in this case, there is no need to consider the minimum price or maximum price and the range between them. Okay, first consider the information you have in the question, and after considering the information you have in the question, do the question. If they have mentioned you nothing in the question, then apply your brain to find the transfer price. Okay. This is the examination. This is the question of revision test paper May 2018. Okay. Tell me, you can do this question at your own. do this question. Do this question. Okay, can you do this question at your own? Shall we discuss, or you're trying to do this question at your own? Okay, quickly tell me that you are trying this question at your own, or you want me to do this question. Quickly tell me. Quickly tell me, you want me to do this question, or you are trying? Okay, I'm doing it at my own. See, I want to recover the profit. Okay, I want to recover the profit. I want to recover all the cost. I want to recover all the profit. I want to recover the profit. I want to recover all the costs. Then accordingly, I will find the transfer pricing of the goods which we are transferring from division A. Okay. So let me do this question. Amount which I want to recover. See, I want to recover the target profit. What is the target profit mentioned in the question? I want to recover that. For division A, we want to recover, this is the target profit which we want to recover. This is the target profit which we want to recover. Okay. So we're considering this 250. Okay, we want to recover this. Now we want to recover what? The interest, this amount. Okay. Division A has employed 1200 lakh as the working capital, and which is done by cash credit on which interest is this. So we want to recover this interest. Okay, we want to cover this interest cost on working capital. We want to recover it all. What is the amount? 1200 lakh into, what is the interest rate? It is 11.50. Okay, I want to recover this interest. So this amount is, we want to recover this profit and interest. So the total amount is, we want to recover this. This is the required profit. This is the required profit which we want to recover. Okay. Also, we want to recover all the costs. So add fixed cost. What is the fixed cost you want to recover? This 400 lakh. This is what you want to recover. Then what else you want to recover? Then this is my target contribution. Okay, this is my target contribution. This value is 788. Okay. Now this is the target contribution. This is the target contribution for division A. Now, division A is recovering the contribution from the sale of the market. They are selling to external market the 60,000 units. See, we have already discussed that we will hamper the production of 10,000 units because we want additional 10,000 unit for division B. Okay, so in external market, we will sell 60,000 unit only. Okay, selling price is 2,500, variable cost is 1,600. So here, from here, we will find the contribution from the external market. Contribution the organization is earning from external market. Okay. So in external market, we are selling 60,000 units. Okay. The selling price of 60,000 unit is 2,500 and the variable cost is 1,600. So this is the value we have. So the contribution from the external sale is 540. Okay. This is the contribution we have from external sale, external market. Okay. So the contribution required by the organization now, subtract this value. We need this total target contribution. We are earning the contribution from the external market. We are selling 60,000 unit in the market. Okay. This is the selling price. This is the variable cost. So we will calculate the contribution organization is earning from sale of the goods to external market. This is the contribution the organization is earning by the quantity in external market. Then this is the contribution which we want to earn by transferring the goods to division B. Okay, this is the contribution you want to earn from the internal transfer. Okay, this is the contribution you want to earn from the internal transfer. Internally, you are transferring 40,000 units. It is clearly mentioned in the question that internally you are transferring 40,000 units. Okay, so you want to recover this value from 40,000 units. From the 40,000 unit, you want to recover it. Okay. So the contribution per unit required here is 620. Okay, per unit. Okay. What is the variable cost? See, generally, if you have a spare capacity, you send the goods at variable cost. What is the variable cost here? 1,600. This is the variable cost we have. This is the variable cost we have and the contribution the organization want to earn in order to maintain the profitability. Okay, because it is already clearly mentioned in the question that calculate the transfer pricing considering the target profit. Okay, so they have already mentioned you that you have to earn this profit in order to find the transfer pricing. From the decision of the transfer pricing, you have to earn this profit for this division. Okay. While deciding the transfer pricing, you have considered the selling price, external sale, and while deciding the transfer pricing of the goods which you want to transfer to division B, always consider while taking this decision that you want to earn this profit. It is clearly mentioned. You want to earn this profit. Okay, ji? So you want to earn contribution per unit. If you want to transfer the goods to division B, you want to earn contribution. What contribution? Contribution rupees 620 rupees. So this is what you want to earn. This is the transfer price of the goods which we are transferring to division B. 2220. Okay, ji? I don't know you people are there or not. Is it clear? It's clear? Okay, Raman is saying This value is 2388. Let me check. My calculation is correct or not. I don't think so. This is the answer. Okay. Done. Quickly tell me done. See, let us revise this. Let us revise this. Let us revise this. It is clearly mentioned that you want to find the transfer price per unit for the product Z you are transferring from division A to division B. Okay, what transfer price you will quote in order to meet the target profit. You want to earn the target profit. What is the target profit? This is the target profit. This is the profit you want to earn while deciding the transfer price. Similarly, like you want to decide the selling price. You want to decide the selling price. For deciding the selling price, you have set some target profit. Similarly, for deciding the transfer price, you have set some target profit. Okay. So if you want to earn the target profit from this transfer price, obviously you will recover the fixed cost. Obviously you will recover the cost, है ना? If you want to recover the target profit, obviously you will recover all the costs which you are incurring here. So it is mentioned here in the question, this is the target profit, and the fixed cost is mentioned here. It is also mentioned for the working capital, you have taken a loan, and on that loan you are incurring some interest. So you want to recover all these three things. Okay, in order to earn the profit, obviously you will consider the cost also. Okay, so you will recover all those things, then you will find the transfer price. See, for finding the transfer price, you will first reduce all the cost, है ना? Then profit. Okay, so you want to maintain this profit given in the question. You want to maintain this profit. So for deciding this transfer price, you need to consider the profit and cost. You need to consider it. Profit plus cost you have to consider. Then you will find the transfer price. So that is why they have considered the profit, the desired profit. Then they have considered the fixed cost and the interest on the loan which you have taken for the purpose of having working capital. You have to consider that. Okay, you have to consider. So in this way, you can calculate the transfer pricing of the goods which you are transferring from division A to division B. Okay. Now the next portion. It is clear? It is clear or not? It is clear? It is clear? Quickly tell me. Okay. Quickly tell me it is clear. Got it. Okay. Okay. Raman has done wrong calculation. Okay. It is clear to all of you? Very good. Okay. Now the next portion of the question. Okay, next portion of the question. It is very easy. This question is very easy. See, the questions are very easy. You just need to read it carefully. Read the question carefully. Okay, everything is given in the question. Okay, so since they have clearly mentioned you that decide the transfer pricing, recovering the profit. So you don't need to apply your brain. You don't need to check this capacity, whether they have spare capacity or not. Because if you have spare capacity, then the transfer pricing will be variable cost. Okay, but since they have mentioned you that you will decide the transfer price considering recovering the profit. Recovering the profit means first you will recover the cost, then you will recover the profit, then you will find the transfer price, है ना? So in this way you will calculate the question. Now let us see the second portion of the question. So you will not apply your brain for thinking, for taking decision, finding the transfer price. Now let us see the second portion of the calculation question. Calculate the two prices, Division A would have to quote to Division B if it become Marani Limited policy to quote transfer price based on opportunity cost. Now see, this is the second portion of the question. In this question, they're not asking you to recover the profit. Okay? They're not asking you to recover the profit, means you don't need to consider the cost or profit to decide the transfer price. Okay? You have done this because it is mentioned here. Now in this question, they're asking you to quote two price. Now they're asking you to quote transfer price. For deciding the transfer price, they're asking you to quote two price. Okay? And for that, you have to consider the opportunity cost also. Now, can you tell me how can you do this? Can you tell me how can you do this? Yeah, no. How can we decide two price? How can we decide the two price? Okay. See, we have already discussed they have spare capacity for 30,000 units. They have spare capacity of 30,000 units because their total capacity to produce the goods is 1 lakh and they're selling externally 70,000. So it means they have spare capacity of 30,000. So for 30,000 unit, you can quote that for if you have spare capacity, for spare capacity, you can decide the transfer price as the marginal cost or the variable cost you have. So variable cost is rupees 1,600. So for the spare capacity you have in your organization, you have 30,000 spare capacity. For that, you can quote the transfer price as the marginal cost you have in your organization. Okay? And for remaining 10,000 units, you have to hamper the production. Okay? So in case if you will hamper the production, you will lose the contribution. See, 2,500 is the selling price and variable cost is what? 1,600 is the variable cost. So you have contribution here. What is the value of the contribution? What is? If you are hampering this 10,000 unit of production, then in such case, for that 10,000 units, the contribution you are losing on that 10,000 unit, obviously that contribution you want to recover. When you are transferring these goods to Division B, obviously you want to recover it. Okay? So obviously you will recover your variable cost plus the contribution which you are losing. Okay? Since if you will sell this 10,000 unit in the market, you will earn this contribution. But if you are losing this, if you are not selling this unit to outside market, obviously you are losing this contribution 1,900 and you want to recover it from here. So accordingly, you will find the transfer pricing, which will, I think it will come as 2,500. So this is the price for the 30,000 unit. You can quote this variable cost. For the 30,000 unit, you can quote this price. And for the remaining 10,000 unit, you can recover this contribution you are losing for not selling your good to external market. Contribution you are losing for not selling the goods to external market. Contribution you are losing for not selling the goods to external market. You want to recover that. ठीक है, this is nothing but your opportunity cost. You want to recover your opportunity cost. If you are hampering your production, if you are hampering your sale, outside sale, from where you are earning contribution, you want to recover. If your internal division is saying that please transfer me those units, then in such case you want to recover that contribution from internal division. Otherwise you will ask the next division to please buy the material from outside the market. Okay, you will ask them, please, I can't supply you the material because I'm selling it outside in more profit. I'm earning more profit. Okay, if you can't give me that profit, then you have option to buy the material from external market, buy it from external market. Okay, they have such kind of options. Tell me it is clear to you or not. Quickly tell me it is clear to all of you or not. You want me to repeat? We can repeat it. Chavi, why you have given this 900 value here? Why you have written 900? Is it 900 somewhere? Let me check. Okay, this is not 19, this is 900. ठीक है जी. This is 900. ठीक है, 900. Then it will come as 2500. You have any doubt, you can ask me. This is 900. This difference is 900. If you have any doubt, you can ask me. Clear? It is clear to all of you. So see, so you can see here while solving the question, you can see here what you can see. While solving the question, you can see here that first we will see the requirement of the question. If it is mentioned in the question that the transfer price will be market value, if it is mentioned in the question that the transfer price will be decided considering the profit, sharing the profit of the organization, we will find the transfer pricing that way. If it is mentioned here in the question that you have to recover the profitability, then decide the transfer price, we will do the question accordingly. Otherwise, if all these instructions are not given, otherwise question will come like this. Okay. For this, you have to consider the actual capacity of the organization, the unit which you are producing and selling external market, the spare capacity you have, and then considering the spare capacity, you will find the transfer pricing. Okay? If you have enough spare capacity, you can transfer the goods at variable cost. But if you are hampering the external market sale, for that you want to recover the opportunity cost. Okay? We have all these concepts. We will discuss all these concepts in next session. Okay, we will discuss all these things. But yes, I think this color is not visible. Let me first clear it. No color. So we have two conditions. First, check if you have excess capacity, means spare capacity. In such case, minimum transfer price will be marginal cost. Okay. And in case if you don't have excess capacity, you are producing the production at full capacity and you are selling them external market. In that case, minimum transfer price will be marginal cost plus opportunity cost. You will consider that. Okay. And in both the cases, what will be the maximum price? Obviously, the marginal revenue or the external market price. Okay, we will consider them, and lower of that will be your maximum transfer price. So in this way, you can find the transfer price of the goods which you are transferring from one division to another division. And this is how you can do the questions. Very easy. Okay. So I think we should end the session. If you have any doubt, you can ask me. See, you're asking me what if the transfer price is not at market value. See, first we will see the condition of the question. If it is mentioned in the question, consider the transfer price as market value, consider that. If it is mentioned in the question, share profit method, ठीक है, find the overall profit, share the profit between the division, find the transfer price. If it is mentioned in the question, recover the profitability of the organization. If they have given you some target profit and they want to recover that, then consider then that and accordingly find the transfer price. But nothing such information is given in such case. If no such information is given, in that case you will see the capacity of the organization. If you have excess capacity, ठीक है, means like your organization have capacity to produce 1 lakh unit and you are just producing 80,000 unit and you are selling it to the external market. So you have the spare capacity of 20,000 unit, or you have excess capacity of this 20,000 units, and you need to transfer this to next division. For such unit you can set the minimum transfer pricing as marginal cost. ठीक है, but if you are doing production, if you have capacity of 1 lakh unit, you have this capacity and you are doing the production for this 1 lakh unit, you don't have any spare capacity, and there is demand from the other 20,000 units. For that you need to hamper your this external sale and you want to recover the contribution which you are losing here. Okay, that will be the opportunity cost. So here the transfer price will be marginal cost plus opportunity cost. This will be the minimum transfer pricing. ठीक है, we will do the question related to this in next session. ठीक है, we will understand these concepts more in detail in next session, and we will do the question related to these topic, and we will revise it again. If you have doubt related to some other topic, you can ask me. Otherwise we will do these question in next session. Okay. ठीक है, so don't worry if this concept is not clear, we will discuss this with the help of the examples and question we have. We will understand that. ठीक है, so I hope apart from this everything is clear to all of you. If you still have any doubt you can ask me, otherwise let us end the session. Okay, there is no doubt. If you still have any doubt you can ask me. Okay, there is no doubt, I think. Okay, thank you so much. Good night, take care, bye bye.